Okay, I think we are live, Vi. I hope so.
Hi everyone. Hi Rafael.
Bye bye.
Welcome to our market talk. Well, it's been a while. When was the last time we did this show?
September, I believe.
Yeah, time flies, time flies. And what an interesting time. So, how are you doing? What's new?
I moved. I bought a house and I moved. That's what's new.
Oh yeah,
So,
exciting. So, how is the trading going? What changed in your process? What are your views on the market?
uh, so, so yeah, like we talked last time in September. We we talked about following the trend. I mean, making it pretty simple. Used to be a meme, follow the trend and stop having headaches. And it seems to have been pretty much the way to go for the past few months. So I'm gonna share some screen from my screen and share some charts. Some of them you have seen. I have posted them on Twitter. So just making sure. Okay. Hop. Okay. Share screen. This one. Okay. Okay. Vi, do you see the screen?
Yes.
Okay. So I'm gonna check first of all. So let's take the victory lap again. I mean, MFR pretty much nailed it on NQ. Some of you are using my buy the deep script as well, and pretty much nailed the bottom. And we reclaim trend after some how to say consolidation with I'd say about a month and a half in bearish trend, and since then it just has been a rocket ship. So basically, reclaimed trend since then, never even retested it. You could have used actually my trade indicator that is available on our trading view page, just to buy anytime we are below to add to your long position. ES pretty much looks the same. It's just beautiful. You had potentiality to buy at the end of last year, and since then, just going straight up. This one is pretty clear. You can see here, just bullish trade. Never even broke it. So it's a beautiful one. RTY was a little bit more difficult to follow. Of course, it's usually more volatile, but the same happened. We reclaimed bullish trend on at the beginning of December, and since then it has held very nicely. Every retest of trend has been a buying opportunity if you were willing to buy this one. I want to show some stuff that I'm currently watching that of course happened, but I'm currently watching. One of them is DXY. So DXY actually reclaimed trend quite recently in February, and we retested this trend at the middle of March and confirmed. So that's, in my opinion, very interesting to see. Uh, I have some signal to say that we could have some kind of short-term top or local top, get some consolidation before we move back up. But the fact that we got the confirmation of trend, so in this area, so 8th of March to 13th of March, in my opinion, is quite significant. One also that I highlighted several months ago was CL. that reclaimed trend in the beginning of February, and since then just keep going up. No retest of trade, just up and up and up. One thing though I am noting is that this is another indicator also I share. It's called volatility. So this is the volatility of the asset. The white line is the trade. And what I usually do, and what I encourage people to do also, to know the profile, the volatility profile of an asset, the trade, is to check usually where the minimum and maximum, what the minimum and maximum will be for a particular asset for its trade value. Could be on the daily, could be on weekly, could be on hourly. I, for myself, use daily a lot and also the hourly a lot. And in that case, for CL, the minimum value for the daily trade is, I believe, 4.2, from what I see. Yeah, 4.2. And we are, trade is approaching this value, meaning that a local top could be coming soon, probably in this area between 86 and 88. So that would be a place to, if you are long, to limit your exposure, maybe sell a bunch. If you want to play on the short side, maybe take a tactical bet. So I would look for a price around 86, 88. You could have, of course, a crazy push like we had several years ago. Yeah, it's earlier. Yeah, like this one in March 22, I believe. Yeah, March 22. Okay, but it's a repeat. I mean, anytime we arrive in this vicinity, a local top will happen. So if you are long, just be aware. This move may be about to end in the next couple of weeks, or maybe a month. But yeah, that's note I have for you. Yeah, I mean, except taking victory lap also on Bitcoin, that was a good one. If you added anytime the buys triggered, you made a lot of money. I mean, you had one in August at 25, you had one in March last year at 19, and another one at 15 in November 22. And I mean, this thing is a rocket ship. So anyway, I want to go to one final one. It's VIX, because I have posted recently about it. So of course, I don't encourage people to short bullish trend. And we've seen YES and NQ and RTY, they are quite bullish. But one setup I always play on the VIX is when I use my volatility trade and trend indicator. The setup works in the following manner. I have mentioned it also on my Twitter page. I wait for VIX to be bullish trade and trend on my volatility trade and trend indicator. Then I wait. This is the first step. The second step is trade going above trend, and the last step is the retest of trade by VIX. In I would say 9 out of 10, this will mark the beginning of bullish cycle for VIX. So I'm not saying we are going to go to 60 or etc., but most of the time we will see for a couple of months, couple of weeks, couple of months. So at least I would say around a month and a half, maybe 2 months, we'll see VIX starting to climb back up and reach what can be called the bullish trend for VIX. So my expectation currently is that this is why I took a tactical bet buying puts on SPY. Is I think trade is gonna hold, and you can see for the past few days since we've reached this place, VIX is trying to go below, and every time it's getting pushed back up. So my expectation is for the next few weeks, months, I would expect VIX to rise and to get a top probably around May, April, May. This is my expectation right now. So the only way I expressed this idea is I bought some puts on SPY. So I'm not going further, just expressing the setup that I see based on my tool. So yeah, this is it for now. Vi, I will stop sharing, then we can.
Really interesting. So for me, it's still very unusual to hear you talking about options, and it's very pleasant to hear. So I have some questions. So you said you bought some puts. So I have a couple of questions regarding that, because can you talk a bit about how you choose strikes for directional bets? Because I know that you mostly do directional bets with options. And for example, when I trade options, I more often do neutral, non-directional and sell ball strategies. So how you choose strikes? What tools are you using to choose strikes, or just volatility, implied volatility, MFR tools, your scripts, what it is?
So the way I do is I'm actually targeting trend. That's the minimum I would expect if we have some kind of volatility event, or VIX going to a bullish trend setup. The retest of trend of the underlying asset, meaning SPY, is my expectation. So how I choose the target is this one. Then in terms of time, usually this setup will start and finish in around a month and a half, 2 months. That's the usual way it will work. So and I chose to go to June as we were almost in April. So this is I'm a very simple man, you know, and this is the way I decided to go. So strike was trend, and the time was the usual time it takes for VIX to express itself after the three steps I have mentioned for VIX.
Interesting, thank you. And another question is gold. You saw the first exponent for GLD today, and so the question is, what do you think about that and your overall views on gold?
So yeah, Earth is very, very strong for gold. I don't hold GLD, but I hold some gold. So that's how I express my bullishness in gold.
Yeah.
I can show something from the screen. So yeah, so you're mentioning, yeah. Rust is very, very strong. 0.78 is quite big actually.
No, unusually big. No, yes.
And I actually had to buy on GC a few months ago. Yeah, it was here in October 23, and yes, just reclaimed trend, and since then just respected it very, very nicely. Boom, 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 anytime. As far as I'm looking at currently, Matrix is my tool called Matrix is saying we still have some room. What I'm worried about also, and maybe you can talk about Hearst, etc. for this, but I marked the minimum on daily for JC trade, and we already reached one of them. The second one will be reached soon. Usually, what you get when trade of JC gets there is at least consolidation, and could happen also retest of trend or break of it to retest the long-term lower range. So that's big answer for JC, but yeah, I saw the Hearst and it's pretty much insane.
Yeah. So actually, because we had this big break from doing these shows, I spent quite some time thinking what to talk about during the first show. What is the most important things, first of all, that happened since September, and how the process changed, and of course, as usual, what are the views for now. But actually, first I want to talk about what I did, what I wish I have done differently in the previous cycles. So during our last year and before, of course, I'm always the most concerned about risk management, and for the viewers and clients, people who listen to what we say and use our tool, I always wonder, the first goal is for people to preserve the capital and not to lose money, and that's what I did myself. But actually, I wish that I had trusted my signal more, because I believe that a lot of people remember that a lot of for quite a long time stocks, and not only stocks, were going up and so on. But I was saying, oh, I'm not buying. No reason to buy. And actually, I wish. That I have behaved differently, not because of now missed moves, or no, I have not missed anything. I was trading differently, but I just wanted to say that I made mistake on that part of not trusting I trusted the signal, but not taking the trades based on it before. But anyway, so now I will talk more from the perspective of the process and the signal itself, because that's what I believe is the right way, and that's how I trade now. So I made some changes in my overall process, and actually I'm very happy with the results. So I will touch a little bit on that, but. Yeah, so I think, Rafael, you already touched on that basically markets are pretty clear. Basically, yes is a buy and hold since at least October, and I will, of course, share the screen. Okay, so this one is what I'm doing. Desktop 2, sorry. Okay. Sure. So I believe now you are actually seeing my screen. So NFR. If we go to TradingView, first of all, I immediately know that there will be questions what this color map means, why it looks differently from MFR transcript. So I just want to tell that it's the exact same MFR trend. I just find this color map easier to understand and use, and makes my charts a little bit cleaner. So that's the only reason. But it's exactly the same as MFR trend script. So if you guys want to have the ability to change from trend channel to color maps, you can always send us an email and let us know. Maybe we will make this happen. But it's just a personal preference, no change. But anyway, if we go to futures, because I tend to look into futures more, basically, well, what can be said about this thing? There's no single reason to be short, and I have quite a big options exposure, still positive delta, so long exposure in main indices and equities in general, but even macro perspective, because a lot of people are talking about how the markets are expensive and everything will collapse and so on. And actually, I don't know, at least today, University of Michigan Consumer Sentiment Index came out very strongly. The consumer index is back to the so-called positive bullish territory where consumers are quite positive, and market PE is not that high as everyone is talking about, because if you remove Magnificent Seven, S&P PE is, I may be wrong, but approximately 18 or something like that. So nothing to be too worried about. Anyway, so for now, from the volatility perspective, it's a buy the dip regime, and that's what I'm doing with different option structures. But it's just a preference. The overall trade is long equities, of course. I wanted to, okay, let's go back here. I wanted to talk about what I noticed that some people miss, and why I am so sure that consensus trade is the long equities, and why I'm not looking to short the market, because it's very funny to be there, but no need. So the most important page, in my opinion, in my fractal range, is actually correlations page, because when it comes to range, it's upside downside ratio, of course, but it's for timing the trades. But how I view the overall situation, and I still think that this page tells you more about what's going on in the markets. And I will go to the dashboard. It just shows a little bit more information, so I will have to talk. But for the entire period since our last show, and for quite a long period before, while we were doing these shows, we were in a relatively low correlation environment. Doesn't matter what period you are looking at, doesn't matter. Basically, since for at least second half of 2023 till now, we are in extremely low correlation environment. And low correlation environments basically mean that stress in the markets is low, and that basically means long equities is where you should be, and how you should be positioned in. So let's first increase period a little bit, let's say 30 days. Okay, so average correlation to SPY. So what it does, I will remind for those who don't remember. But that's, first of all, the script is freely available on TradingView, but basically it's all SPY sector ETFs correlation to SPY itself added up together and divided by the number of sectors. So nothing, no secrets there, but very powerful indicator. And basically, since as you can see, since September or so on, we are just grinding lower, and and currently we are at 0.6, which is you can say is mid to low, not extreme, of course not really low, but it's basically the market environment where those people who say that long everything is a overcrowded trade, well, not. Maybe long Magnificent Seven can be overcrowded trade, but long everything is not crowded trade at all. So if we see about dollar and bond correlations, so we also see that SPY TLT correlations, what we had to do, basically we are grinding down since November and they're almost zero now. Yeah, so of course we see movements up and down, but the overall move for the last 6 months is down. And then later I will show you that it's not cherry-picked period of 30. I will show you on our table where you will see that doesn't matter what period you choose. Well, I mean, the start of a move grind, of course, will be different, but the time when it started, but all the correlations are going down. Dollar correlations also are almost none. We were in negative correlations as we should have been, but now dollar correlations are actually moving higher from negative 70 to negative 16 or 18. So that's worth mentioning that from my point of view, it does not change anything for equities, but maybe we should not be that sure about inflation being done with, and also regarding rates, because if this continues and if dollar correlation will continue to grind up, maybe the macro regime will change. But for now, everything is just paradise for the equities. So if we see 30 days correlation matrix, of course, no crowdiness in the equity trade, because even though a couple of sectors have correlation of 0.8, it's nothing. It's nothing. Ignore XLK because tech being highly correlated to the index itself is absolutely normal. Actually, it would be more strange if tech correlation would be lower. But overall, as you can see, energy is living its own life. Utilities also are living its own life. About volatility, I decided that I will not even talk about volatility because we all know what the realized volatility is and where the VIX is. So what I do in the market? Actually, for some assets, I'm selling the options, but of course, obviously, that asset is not SPY or other indices. Now I'm short quite a few puts on VITO, Bitcoin ETF. Also, I'm short puts on some tech names and tech sector ETFs. This is again quite a bullish view, but because I saw some nice opportunities from implied volatility point of view, that's why I chose that, because bullish, bearish, directional or non-directional are still deep in my heart. I'm more of a vol trader, so I try to find ways to express my views in the options or futures or combinations of those. So that's why now I'm short those. So yeah, so bullish on Bitcoin, still bullish on Bitcoin. I mean, even if we go back to trading view and see I don't know, spot, maybe it doesn't matter, to be honest. You will see the exact same thing, even though upside downside ratios now may look not positive, but the strength of a trend and Hurst exponent. Hurst is not available on TradingView. I will touch on that because I see there's a question in a chat. But this Hurst exponents and this trend. I mean, any correction in Bitcoin will be a nice place to add more or buy if I or sell some vol. We'll see. And as a vol trader, when I'm bullish, actually, I want corrections. I want assets that I'm bullish on to go down, because what it means, IV will go down, and for me, when IV will go up, and for me, when IV is going up, then my playbook allows me to choose a lot more different strategies. So that's basically that. But of course, and as I mentioned, yeah, I'm long indices, both QQQ and SPY. I'm not touching IWM. Honestly, I could rant about IWM for a long time, but I will not. I'm just saying that being long IWM compared to being long SPY, for example, is just a gamble, just that. And the only way and if you make money long IWM, it will be just because of a positive correlation and markets going down, because that thing, well, it's obvious. You can take ES and Q and RTY and see where RTY sits historically. I mean, it's weak, and usually from spread trade perspective and macro perspective, you want to be long strong assets and short weak assets against that. So actually, that's the view. So no, I'm not short IWM, but I would not touch that thing on the long side for sure. Yeah, so what I wanted to say as a recap of the environment, and also as a proof that it's not just now, and it's not just short-term correlation. So I want to go to the other dashboard here. This one, for the first moment, it can be confusing, but actually it's very easy. On the y-axis we have periods. It goes from a couple of days to 180 days, and x-axis is of course time, and this heat map is just showing you average sector correlations. It's average sector correlations, not only for every period but also historically. So, and we can see that we had some higher correlation environments in the end of 2022 and the beginning of 2023. Well, of course, in May of 2022, but we all know what market environment was then. Of course, everyone was shorting the market, and life was very good for bears. But anyway. Since then, doesn't matter. Maybe you want to say since May, since June 2023, or even earlier, both short-term and longer-term correlations were in very low environment, mid-environment. Of course, very low environment. We had some periods of short-term correlations close to zero, these red spots, but that's not what I'm talking. That would be not low environment. That would be extreme environment. So, and extreme environments, both on the high side and low side, usually tells that it will not last long. And mid-environment actually is interesting for another reason, because mid-environment is not signaling any reversals at all, because, I mean, not extreme on the upside, not extreme on the downside. So, and this chart just proves my point that doesn't matter. You can look 180 days correlations, you can look 10-day correlations, you can look now or July 2023 or whatever. This environment is low correlation environment, and it's very easy to prove that. So what to do in low correlation environment? Honestly, when upside downside ratio is favorable, especially when there is a cap on both longer term and regular ranges, and we added this indicator on my fractal view. So when upside downside ratio is on your side and trend is on your side, I mean, you should ride the trend. Of course, risk management is important, but risk management is not just sitting on the sidelines all the time. Risk management is more about the capital allocations and diversification. So yeah, that was my rant. Actually, so now I hope that we will continue doing UB's shows bi-weekly, and then I will be able to talk more. But actually, yeah, I spent quite a lot of time thinking about what to talk, and I wanted to talk about correlations because everyone is talking about trend assets being overbought, oversold, or ranges in general, which is important, don't get me wrong. And upside downside ratio on a range is the first thing that you should look at when you have a trade idea for timing. But in order for you to understand the environment and to be able to come up with those ideas, you first go to correlation page. It's way more important for the process. So process starts here. Yeah. So I saw a question. Maybe now wait. I will get rid of this. I want to see the chat. I saw the question on the YouTube chat, and by the way, I want to encourage you. I see that there are people who are watching this live. If you have any questions, ask in the chat. But I see a question that for me, can I recommend a Hearst script on TradingView, or can we add a Hearst script on TradingView for MFR? So of course, I tried that, and there are issues, and at least for now. And so I don't know regarding optimizations, but Hearst exponent, even though TradingView overall as a platform is quite fast, but it takes a lot of calculations. And whenever I try to write the proper Hearst exponent, especially the longer term Hearst exponent script for TradingView, what happens is just TradingView freezes. So I'm not blaming TradingView. I'm blaming me that I cannot optimize it good enough for TradingView for now. But yeah, so never say never. But for now, I don't know if I'm able to do Hearst exponent for TradingView quickly, because I have alpha versions or so on. Whenever I attach it on a chart, TradingView just freezes. so yeah. Yeah, so that was my rant. I hope it was useful and not annoying, but I wanted to say those things.
Yeah, like Vi said, the first thing you should look at when you log in is check the upside downside ratio. I mean, this will save you a lot of headaches as to okay, what's the plan today? Okay, you just check the upside downside ratio and you see it's like QQQ SPY, it's like 2.5, and you've got VIX at 0.2. So obviously you're not going to come shorting the market today. I mean, or thinking maybe I will not participate today. I don't know. I have swimming pool or something. I mean, this is the time to to go long on any correction. And same way, the other way around. You log in and you see the upside downside ratio for VIX, it's 3. And you have upside downside ratio for SPY and QQQ on the normal range and long-term range below 0.5. Maybe today is a good time to, I don't know, just maybe do some range, very short range trading, this kind of stuff, or just do nothing. So make your life simple. That's a good way. Vi, I want to come back to something that I noticed a few weeks ago, and I mentioned this to you, and you gave me a very interesting reply. And actually, this thing was also a user told me about it, so I would guess a lot of people noticed that. It was in a period of I would say 2 months, the Hearst from SPY, QQQ, and probably IWM. This one I'm not sure, but SPY and IWM went from an insane 0.9 on a 3-month basis to almost 0.5. And let's say you are investing in an asset and you see this kind of thing happening, and it's bullish trend, of course. How do you react? What do you take from this?
So you mean correlation went from high to not?
No, not correlation. Hurst exponent. Sorry.
Sorry, my bad. You were showing this matrix's correlation. So basically, when Hurst exponent is extreme, and extreme for the shorter term, it would be closer to 80, and for the longer term, it rarely goes to 80 because so closer to 70. Actually, it means two things. Yeah, first of all, of course, means the trend is very, very strong. Okay, but nothing is going up or down in a straight line. So same with correlation, same with momentum scores that are available on TradingView, same with Hurst exponent. Extreme values is a signal to get out, to not necessarily immediately, but it's a signal that it will not last long. It will not last long. And then you need to decide which one to go out, or what's the change. So SPY IWM, for example, if you are really bullish SPY, and SPY signal is very strong, and Hurst exponent is going down on IWM, lower Hurst exponent means two things. Because it can go where it was going, because bullish trend is bullish trend, but Hurst exponent going down, it means there will be choppiness. So choppy environment is coming, more volatility is coming. So the question you need to always ask is whether you want to sit in that volatility or not. So it's a confirmation of a reversal, because like I said, extreme high values are the signal of reversal, and then it's going down. Actually, that reversal is happening, and that reversal is not necessarily in price, because in the beginning, of course, because when choppiness comes back, so let's say it was very, very smooth trend, everything was going up, and now Hurst exponent is going down, you will see spikes. You will see up, down, overall move. When you then look for when a couple of weeks go by or so, you will still see that maybe that asset went up, but you will see that there were a lot of intraday choppiness, or one day was down, another day was up, and so on. So from my perspective, especially on highly correlated assets, I don't hold those. If I'm long indices, so that was good. Your example was, let's say, so I will buy SPY, maybe QQQ, but rarely both. But sometimes, let's say, SPY and QQQ, or I will choose one, and I will choose by the overall signal strength, including everything. So, of course, trend, ranges, momentum, Hurst, and I will not hold that choppy asset. No one needs choppiness in the portfolio when it comes to highly correlated assets. Of course, when you are talking about SPY versus some stock, whatever, it doesn't matter, some stock, it's a different story. But when we are talking about a couple of indices, no, I would get out. So I don't know. I don't think that I actually answered your question. I was just rambling.
Yeah, you were rambling, but I remember clearly your answer when I asked this. You told me it just means trend is bullish, but the path is less smooth.
Yeah, so that's what I'm just.
That's
I
what
just
you
said.
just rambled about.
Yes, yeah. I just because yeah, I see a couple of questions.
Sure.
One question from Fitzroy. So yeah, I'm talking. Why you are talking of correlation? So how would you use your tool in MFR to explore opportunities? So how to use correlation for idea generation? The question is. So first of all, I would use two tools. One is the correlations page in MFR. Another tool is average correlation script in TradingView, because we have not added it in MFR because it's available on TradingView and
yeah, when I say available on TradingView, it means available on our MFR page on TradingView.
Yes, correct. So idea generation is not necessarily based on correlation. Environment is based on correlation first, and for you to get a bias, environment is very important. So I use it in two steps. So first step, of course, was that I was talking about. So I will just skim through it very shortly because I just spent a lot of time. So I will not repeat the same thing, but I look at overall correlations, both average on TradingView, which is basically this line, but it's available on TradingView, or sector correlation. So if correlations are still going down or not, and not extremely low or high, I will be less fearful. Let's talk about that for a second. What it means, less fearful? It means that I'm more willing to search for opportunities to be long in equities. So now what is, and if correlation is going down, going up, or extremes, because don't forget, as I said, extremes also is a signal of a reversal. So anyway, if correlation is going up, I will be not willing to take more long exposure in the market, and I will adjust my deltas in my portfolios. Become delta, so I trade options, but it doesn't matter. Deltas, basically, I will reduce my delta, so I will reduce my long exposure. So now idea generation. Correlation can help you in idea generation for sure. But when you see which sectors are not correlated in equities or very low correlated, you can use one of the way of trading, which is a long short spreads. I talked about it a lot before, but basically you can go long one asset and short another asset. And of course, spreads are available both on MFR and they are available on TradingView. So now I'll give some example based on 10 days. Let's say that we want to trade, for example, you want to be long tech. Okay, so you decide, I want to be long QQQ, but what's a short? So, of course, you can do cross indices, which is would be IWM, but you can choose some sector. You can choose sector energy or XLU or something. So let's take a look at, for example, energy or XLU. So TradingView is easier. You can do semicolon notation on MFR, but TradingView is a lot easier. So QQQ / XLU, just random thing. But I do it with individual names. But for individual names, I mean, you need to look for signals. You need to maybe look for fundamental things and other reasons to trade them. That's why I will not show examples how to, because to search for individual names, it's not MFR is a timing tool. So you can use upside downside ratio, but I would not trade asset just based on that. But anyway, so QQQ XLU, as you can see, you have a spread and you have a range, you have a trend, you have everything for it, momentum scores, and then you can See, okay, this spread is actually has quite a nice upside downside ratio, because I can see that at least on both regular range and longer term range, basically upside downside ratio prefers bulls, and the trend is bullish, even though consolidation is now this spread is actually in some sort of consolidation, but still, I'm just giving an example. That's why I want you to. But these assets are not highly correlated, so you can trade this spread, or you can actually even go buy both or short both, because you will expect that these will not move to the same direction all the time anyway. Of course, correlation is positive, so I would not do that. If you want to buy both or short both, then find something with actually negative correlation. But correlation is for the environment. In this correlation environment, you want well, but you should be willing to look for positive delta opportunities. It means long the market. That's what. And for idea generation, I use a lot of tools. I mean, from macro perspective, of course, leading indicators, ISM, PMI, and services PMIs, consumer sentiment, construction data, building permits, job reports, and so on. And there are clues in those reports what sectors are, especially ISM surveys, which sectors are growing, which not. Then you dig deeper into actual tickers inside each sector, and you look what's going on, and then maybe you use MFR to see which tickers are bullish trend, which bearish trend, which tickers are actually have a cap on range high or range low, and something like that. So I hope I answered, but I want to stress one thing, that correlation is for your overall environment, and environment gives you bias. And no matter what people say, you need to have some bias, but there are ways to make sure that more often than not, your bias will be on the right side of the market, because there are a lot of people who still they have bias. The problem is that their bias is always bearish, so or their bias is always bullish. You don't want to be that person, and again, my process always evolves all the time, but correlations can help you. Correlations with leading indicators from the macro space, and I mentioned a couple of sentences, very short. From global macro perspective, there are macro indicators that are leading, other indicators are coincident, and of course, other indicators are lagging. So you want to look at leading indicators. Leading indicators are, surveys. It can be consumer survey, it can be business survey, construction surveys, or job reports, and so on. But not reports like non-farm payroll, but I mean actual reports where jobless claims and what's going on in every industry and so on. And then you have a view, you can search for companies. So of course I will not recommend any companies, but there is plenty of information about that. MFR is a tool to avoid I always think of MFR first of all as a tool which helps you to avoid doing stupid things. So if you have an idea to buy XYZ, but maybe MFR says, wait, it's bearish trend and upside downside ratio is 0.1. So my biggest goal in life is that this information will stop people from making mistakes that will hurt a lot. So yeah, but correlation is very powerful. It's all about, and correlation is more about market environment, but correlation can literally help you to come up with interesting spread ideas. So experiment with correlation, not only sector-wise, but individual name-wise, and then you will, I'm sure that you will be able to generate watch lists of different tickers and names. But again, how I view watch lists, because based on correlations, I can create hundreds of tickers for myself, but watchlist is not an idea. Well, sorry. Watchlist is an idea. Idea is not a trade. Trade is when you take that idea and you monitor it and the timing is right. Yeah, so I hope that was useful.
Yeah, thank you, Vai.
Yeah, Rafael, now maybe you see a question about your buy indicator, so you can answer that. On YouTube chat, Fitzroy is asking where to find your...
the threshold start, where can I find that one? Okay, so you go to my profile on Twitter, sorry, X, and then you go to the pin tweet at the top, and the link is there. So it was purposely because the user remarked it's not on your TradingView script page, because it was purposely hidden, so I could actually post it on MFR script page. But the problem is I am having issues with TradingView validation tip for scripts, and I just got fed up with them, so I didn't post it again. But you can find it in my pin tweet, and at some point I'm going to post it on our MFR TradingView page. So yeah, that's good, Vai?
Yeah. Thanks
Okay,
for
guys,
your answer.
I want to stress again that so some of the scripts, I think the SPY correlation is freely available on
yes,
our
correlation
TradingView
script
page.
is free. Yes, yes.
My buy the dip script is freely available on my own page, so you can find it on my Twitter page, Vola. The other ones, they are only available for people with at least 200 tickers in their allowance, meaning they need a premium subscription plus an extra 150 tickers subscription. Also, we will always have a €1 for 3 weeks trial. So basically you pay €1 for, I think it's 3 weeks. That's it, right, Vi? 3 weeks, huh? Yes. And you get access to premium subscription for 3 weeks. So premium subscription is pretty powerful, huh? You can see financial data, you can see correlations, you can see CFTC data, IVOL data, you can build your own portfolio, your watch list, you have access to gamma data. I mean, it's quite good. So I encourage everyone to try. It's very cheap, and we are currently rebuilding also some of the pages to make them more efficient. And I know Vi is working on some other tool also to improve the option page. This thing will take more time, but I know that this is something you are working on. So anyway, thank you for listening. We will see each other in 2 weeks, I guess, Vi.
I hope so.
Yeah, we will. And now I'm settled, so it's okay.
Yeah, so it was a pleasure to talk. I hope it was useful, and yeah, thanks, Rafael. Thanks, everyone, and see you in 2 weeks. Bye.
See you in 2 weeks. Bye, guys.